Very good morning. You're watching India Market Open, and we're looking like we might be set for a bit of a rocky start this morning. Week of consolidation perhaps, and your implied open for the Nifty is definitely pointing to that kind of a scenario. Asia is down. US has not been that great closing, very mixed close overnight, at least on Friday night from the US. So global cues aren't really positive. Asia is down, and I think a whole host of other things as well, Niraj, which might be weighing on the market's mind. First of all, nothing too much to talk about that came out of the GST meeting. And also all of this clarification that has come from Quant Mutual Fund, one of the fastest growing in terms of AUMs, saying that SEBI has sent them inquiries. Inquiries is the word they've used, and they're following up on it, etc. But a lot of reports doing the rounds on social media, etc., and that will be worrying the market as well.
Yeah, and maybe should on both those counts, actually, the global markets the way they are, and plus the clarification, which isn't completely dismissive of what one of the stories at least spoke about as well, in some sense, right? So let's hope that, I mean, it's a large fund, and we do not want any issues out there. They're managing a lot of money. They've given great returns. Hopefully, it's all kosher for minority investors. That's my only...
Minority investors, you mean retail investors?
Retail investors. Yeah, sorry. Thanks for correcting me. But yeah, effectively just hoping that that stays. But yeah, you're right, Tamanna. Global markets are a bit fuzzy, especially after what Japan has said. Let's wait and watch if indeed... Though Nikkei is in the positive, which is a good thing. Let's hope that... let's see if that kind of stabilizes during the course of the day.
Yeah, no, so just before we come to global markets, I just want to wrap up on that quant piece, and you're right, there it wasn't a denial, it wasn't an acceptance, it just says that there are some inquiries from SEBI, and we have a special report from our colleague Sajith Mangat ahead at 8:15 on this, so stay tuned for that, on more details of what we have learned on, you know, what could have happened. There was also another very viral post of an investor talking about his sister who's invested through Grow. This is allegedly, and says that they put money in the platform and it never actually got invested, and they're trying to get a redemption, etc., etc. Just to make the broader point that this market is right now very, very dependent on retail investors going in for their SIPs every month. There is very little room for error. So if there are any fires to put out, they need to be put out ASAP.
Yeah.
Is all I just wanted to add.
Just the point that I saw the Twitter thread, X thread as well, and Grow and its part is saying that the money never got detected, so the investor can go back and check also. But the limited point for everybody who are thinking about what can they do to safeguard going ahead, you get a CAMP statement, you get an NSDL statement, which has the compilation of all your mutual fund investments, whether you've done it through X platform, Y platform, or through a distributor, or a combination of all of these. Let's assume you use 4 or 5 platforms. I think that helps you out with that piece as well. So bear that in mind. This is not a quant related thing, of course. Let me clarify it. It is the other piece that Tamanna was speaking about, which is whether if you're invested through a platform and it didn't get deducted, whether you know whether your investment has been made or no. That statement that comes to your email tells you all your investments. So just do those checks. It's your hard-earned money. Very simple to do as well.
Absolutely. All right, let's get to the global setup, and start with how U.S. markets closed on Friday. Mixed set of trade, and it was actually Nvidia which pulled down the Nasdaq, down about 62 points. So Nvidia down about 3% odd in Friday's trade, but still week on week, year on year, still about 150% up. So a little bit of a breather there from the tech stocks, which is why the Dow was so completely flat. Dow futures now in the red, Asia also being weak. But apart from that, let me just pull up the bond yields for you as well. And the bond yields were also quite sluggish because retail sales data came in softer than expected. The 10-year at 4.25%. Crude on the upward trajectory. You saw some profit booking after the spike up, but Brent is close to $85 levels because gasoline demand is going up in the US. So crude directionally not in the best place as far as Indian markets are concerned. Let me come back to Asia for just a bit. Key data is expected inflation data, Australia and Japan, that will be looked at. Niraj spoke about the yen and the focus over there as well. Nikkei up, but Shanghai down 1%, and the Hang Seng also down. Same for the implied open as far as India is concerned. Let's revisit what's happening there, and we're looking to close about 100 points down this morning on the Nifty as of this point. So you are seeing a couple of factors that are not very positive in terms of cues for the markets. What comes next now is the question. Let's look at fund flows and how fund flows stacked up on Friday. Remember, you've had a whole week of dismal trade in terms of volume. Sideways, consolidated, call it what you may. FIs came out and sold about 1790 crores on 21st June. DIIs bought 1,237 crores. So I think there is the requirement of a key sort of take right now, or one big factor to look at to change that mood. Otherwise, it's quite sluggish, Niraj, and could continue this week, one reckons.
Yeah, I mean, no other trigger for the time being. So maybe until the elections come in, that stays. And by the way, if you are in, Tamanna makes a very valid point. If you are indeed into trying to figure out when does this change, C.K. Narayan, Dr. C.K. Narayan has written a very nice piece on our website over the weekend. Maybe a week of consolidation yet again is what he reckons as well. But it seems pretty obvious that we might have a market which is buy on dips with no downside confirmations. I think that's the part of my trade setup, that there are no downside confirmations because Friday's corrective move was not a very large one, just 0.25%. Now, if we fall significantly, maybe there is a trading downside that comes in and maybe people talk about that. Let's wait and watch. But for now, no downside confirmation as yet, and it remains a market which is a buy on dips. Now, whether the dip is 1%, 2% or 3% is anybody's guess, to be very honest. The other thing is, we saw some fairly large short position. So therefore, the market stays as is. People focus on specific stocks and pockets, more so right now as opposed to trading the index. So that's the limited point. Cement and fertilizers, some very large short build-up seen there. Stocks like Shri, Dalmia Bharat, GNFC and others had very large OI build-up and price movement downwards, which suggests that there was short build-up that happened. Very interesting to see. I can understand that some people preempted or took a brave trade on fertilizers because the stocks were correcting and thought that, oh, what if something doesn't come in? Maybe the stocks correct today. By the way, they very well could correct today. But the point I'm trying to make is, even on cement, a very large trade taken. Again, maybe related to the weekend meet that Tamanna was talking about. And she'll talk about it in detail, I'm sure. And we will talk about it on the show as well. But the limited point is, there's some very large short positions out there, and remains the key to watch whether these stocks correct further today. The market, or certain sections of the market, certainly bet on this happening. And lastly, a lot of people got excited on Friday on telcos, particularly Vodafone. Rumors floating around that Vodafone will hike prices. Just one point is, one, very difficult to figure out when the price hikes will come in, and two, they'll not come in isolation for Vodafone. If there is a price hike that has to happen, suffice to say that logic suggests that all three will hike together, and therefore don't bet your barn on a trade which suggests that there will be one single player which will hike prices. That is probably very, very, very difficult to happen. But let's wait and watch. The stocks were active on Friday. Maybe there is some more steam in the session today.
What do we bet the barn on? I find that interesting. So one can't, all have to together.
Very likely, right? Logically.
I reckon none of them can right now. What? I mean, everyone was waiting for the election to get over and then this to come in. But I don't see fundamentally what's changed that allows companies or pushes any one player to come out and hike prices.
One player for sure not. So if all three decide together, I mean, you are at the mercy of one of those three. You and I don't have a choice, but certainly not one player.
To pay those prices. Just on fertilizer stocks, I don't know, Niraj, this could be counterintuitive, but remember how fertilizer stocks saw profit booking and got completely hammered on Friday. What happened in the GST meet is not necessarily negative. In the sense, it was at least on the agenda, unlike online gaming, which didn't even make it to the conversation. So I don't know what Delta Corp was doing up there for most better part of second half of last week. But fertilizer stocks were discussed, and it has been referred to the GOM, the Group of Ministers on Chemical and Fertilizers. So essentially, states are on the same page wanting those exemptions, which could be seen as a positive setup. So it
in which
could
case,
happen.
maybe some short covering, who knows?
I think so. So be prepared for some short covering in some fertilizer stocks. I'd be keen to see what happens with FACT. FACT has been bucking the trend even through most of last week. So that's one to watch out for. Remember, RCF, Chambal, all of them got badgered, but FACT was still up about 4%. Watch out for those, and if there's some short covering there. Just a couple of more stocks that we could talk about this morning. One was Garden Reach Shipbuilder. So a couple of reasons why I picked this. One is because are we going to see some short covering in defense as well? Defense also, in that cyclical trade, we're seeing quite a bit of a sell-off. Is there time for a pullback? Garden Reach at least has some news to go with it. It's gotten an order for the construction of 4 multi-purpose cargo ships. Vessels will be having a capacity of 7,500 deadweight tonnage. Order consideration of $54 million. That's about 450 crore rupees. And remember, their order book as of FY24 is upward of 22,600 crore rupees. So Garden Reach, which saw a drubbing of 6.5% on Friday, could that see some of a pullback? We'll watch out for that. Ujjivan Small Finance Bank is the other one that I wanted to talk about. They had an analyst meet, and the takeaways is not something that the market is going to like, because they have seen a revision for their outlook in FY25. They see stress in its micro banking portfolio in Punjab, Haryana, Gujarat, UP and Kerala. They've lowered their loan growth guidance by 500 bips. Expect some harsh treatment with Ujjivan Small Finance Bank this morning, one would reckon. So even their growth, they see at 20% versus 20 to 25% earlier. Credit costs, as per this revised guidance, goes up 1.7%. It was 1.4 to 1.5% earlier. ROE they see at 20% versus 22% earlier. So on every metric, you are seeing a bit of a downtrend there. They do say that they will increase their secured mix, and they maintain margins at 9% despite increase in secured mix. MK still has a buy on Ujjivan with a target price of 65 rupees. But I don't know. Watch out for Ujjivan this morning is what I would say.
Slam dunk, Tamanna.
Yeah, slam and dunk, completely. So harsh treatment expected for Ujjivan.
Certainly. Also, this whole talk of this farm loan waiver in Telangana, and while both the two brokerage notes that I saw, which is IIFL and INCRED, saying that maybe a sentimental negative because INCRED makes this point that it's largely PSU exposure, Telangana at least, but sentimentally negative for MFIs. Ujjivan has exposure to the MFI book. So aside of the fact that they have done this exposure as well might come to hurt Ujjivan. So could be very interesting to see what happens to Ujjivan today. I would not be surprised, as I'm sure you would not be as well, to see this stock.
Completely. So that's what I started by saying, that it's going to get torched and in for some very harsh treatment in open trade on Ujjivan Small Finance Bank. TBO Tech was the other one in this Goldman Sachs note. Niraj, I know that you pointed it out as well. So Goldman Sachs has initiated a buy with a target price of 1970 on TBO Tech. They've said revenues have grown by 26%. CAGR is expected at 22% between FY24 and 27. So company is consistently profitable. Expect FCF to PAT at higher than 100%. So TBO Tech, one reckons, could see some action this morning.
Yeah, the Goldman history of recent past, everything that they've touched has turned to gold.
Read Map My India, CE Infosystems.
Yes, and a couple of others. But TBO Tech in particular, the standout line. So one, a bit later on in the note, they go out and say that they expect a 30 to 33% EBITDA CAGR from FY24 to FY30. I mean, show me businesses which will grow their EBITDA at 30% for 6 or 7 years. If Goldman's prediction is right, by the way, then it's fabulous, part one. And free cash flow to PAT to stay over 100. I mean, companies which generate high amount of free cash flow are everybody's delight. Now, the valuations may be one thing, but if a company grows like this with the kind of free cash flow they're talking about, valuations become cheap 2-3 years down the line if they're expensive currently. So bear that in mind. TBO Tech could be a very interesting name to watch out for in the session today, most certainly. We've spoken about car trade, but interesting that it's not a clean out trade, remember viewers, and therefore the impact might be different than what happened to a Sansera, for example. But the stock had run up already in Friday's session, so maybe a bit of a pullback because the deal is at 820, which is about a 4-5% discount. So just wanted to point out the fact that it's not a clean out trade. So that's one thing to keep an eye out for. Lupin has gotten an EIR from the US FDA for its Somerset manufacturing facility. These days, pharma stocks are getting warnings, EIRs, observations left, right, center. We've seen happen to Sun Pharma as well last week. Watch out for Lupin in the session today. Not as severe as Sun Pharma, I must say, but may react a little bit. And Inox Green was up 7% in Friday's trade. Now we know why to an extent, because there's a board meet that they came out with this announcement post-market hours on Friday. The board meet is on June 26th, which is about 2 days from now, to consider raising of funds to multiple routes, including a preferential allotment. So watch out for Inox Green in the session today. Could be an interesting one. I reckon Tamanna spoke about Garden Reach Shipbuilders, but the stock was down and 450 crores order, so that's the other one. So these are the first three from my end, Tamanna. Anything else that you spotted?
Yeah, just Adani Enterprises, which we should keep an eye on for. That will be one stock in focus all through the day. Their 32nd annual general meeting is today. Remember, they're eyeing a $100 billion capex over the next decade. Company has planned a capex of 80,000 crores just in FY25. You're going to hear a speech from Gautam Adani as well. That's about, I think, 10:30 this morning. So watch out for that. And the other things that you should see is their plans on development of green hydrogen ecosystem, outlook and plans on development of new airports, mineral businesses, and plans on leverage and capital management. Standard disclaimers, of course. We're watching NDTV, which is part of Adani Media Group. So that's definitely, I think, one clutch of stocks that I would watch out for.
Yeah, Prestige Estates, if you haven't marked it already, but board has finally approved this. So this came 3 days back that they will do this. Now they've approved it. Raising of funds of up to 5,000 crores via QIP. So keep an eye out for that as well. And lastly, viewers, we'll talk about this in detail on Editor's Cut, and me and Tamanna have given you a brief of this. But maybe on Editor's Cut actually is when we try and talk about the impact on a possible impact on Quant. And again, I think Alex and Sajid joining us now on that. It's a different version of an Editor's Cut because, Alex, we are not doing it standing, we are doing it sitting, but it's it
will be as cutting and incisive.
I'm sure.
and as serious a topic as it can be. But what is it that we are officially learning? Let's lay out the ground first.
So Sajid, in fact, is the one who should lay that out because he's the one who heard it first, and we've got certain information and confirmation in the way of an email, Sajid. So why don't you take us through what we know so far?
So, my understanding of the situation is that it's an investigation undertaken by SEBI. They have reached out to the Quant offices and for searches under the powers which have been given to them. While some of the media reports are talking about front running, the investigation could possibly be leading towards front running. It is not certain yet because until unless the investigations are over, nothing is uncertain at this point in time. But it seems that there are irregularities in the way it's been conducted, and the SEBI searches or investigation is pertaining to the thing. Remember, we had a similar case 2 years back with Axis Mutual Fund, where the mutual fund came out very boldly out and saying that they have identified the employees and they have terminated their employment. In this case, Quant has said that SEBI has sent out inquiries and they are cooperating with the regulator there. So they haven't come out with the details of what exactly the inquiries are pertaining to. But it's confirmed from our end, from people we have been talking to, that it's an investigation which is there and could be leading to that kind of thing. Now, interesting is that Quant has nearly 90,000 odd crores in equity AUM. 30% of that is in small cap. And if you look at some of the stress test results for May which came out, the results have worsened. In Feb it was 22 days for 50% liquidation. Now it's 28 days for 50% liquidation. So my understanding is that there is a redemption, and as a result of which there's an investor update which was sent out by Quant last evening to all the investors of mutual fund of its schemes, assuring them that that they are cooperating with SEBI. But there could be some pressure on the small and mid cap.
So I have a few inputs on this, because I was just speaking to a large distributor. What they were saying is that they have gotten significant number of messages over the course of the last evening till today. So that's the first thing there is likely to be.
Messages from investors.
From clients saying, what should we do? Should we get out? So what they have told me is that in all likelihood, SIPs is something they can react with belatedly. They can see how this pans out, but immediately the large investors that they take care of, they would likely get money out. So there is going to be redemption pressure starting today. The other aspect that they spoke about is that these schemes, though your stress test results is 28 days for 50% of the portfolio for the small cap fund and about, if I'm not mistaken, 9 days for the mid cap fund, both of these schemes hold large amount of their assets under management in very liquid counters. I will name them. Reliance Industries, nearly 10% of the small cap fund. Jio Financial Services, about 6% of the small cap fund. Similarly, for the mid cap fund, you have Reliance Industries accounting for 9.2% of the mid cap fund, and this is as per the latest developments. The interesting point that they said was that the market knows about this as well, and you will likely see pressure on some of these very large counters. You will see punters getting in shorts on these, so the price pressure on the downside. Definitely you're going to see an implication for the performance of the quant funds at the very least. So it may not be a liquidity event, but the performance of the quant fund and these assets are likely to see a drawdown in trade.
So, that's how it works, right? I mean, in case of a redemption pressure which comes in, we don't know how much of cash they are holding at the end of May, but I'm sure that going into the entire June election results, they would have gone into cash and then maybe redeployed it. I'm just assuming that part of it, because June we don't know. But the thing is that you have to sequence it with the most liquid to the least liquid.
According to Money Control, according to Morningstar, apologies, Money Control is what reported the number. But according to Morningstar, cash is 3.86% of the small cap fund as well as the mid cap fund. It is quite a significant. So less than 5% though of the assets under management.
Can I just come back to the origin of the story before we get into implications, and let me just dial back. So, and that's the important bit, because what we are learning is that there is an investigation and there is suspected irregularity. I just want to spend a second on that, Sajid, because that's very, very, very important right now from the perspective of our viewers, the mutual fund industry, where there is so much faith of investors. Is there a sense that this is a localized event? Because like you refer to Axis Mutual Fund, where it was one small contagion, which was one small event which didn't lead to a contagion. It was quickly circled off. So is this looking like an endemic issue or a localized event? Anything that you can add in that detail?
It's increasingly...
What do you mean by localized?
As it could be one or two people, which is a problem, or one or two branches, which is a problem. It's not a very basic issue in the system, because that's what investors would want to know.
So in the case of
Axis, is it one or two bad apples? Let me put it even simpler.
No, it starts with 2 apples and then goes to dozens, right? In the case of Axis, it was started with 2, and by the time SEBI came out with the final order, it was 21 entities which were barred from capital markets on this. So we don't know how far it will go. But it seems that mutual fund industries, and this the regulator has been talking about, that how the mutual fund industry need to put checks and balances for to prevent this kind of irregularities, and it's happening. We hear this happening in the industry quite often, but there is and it's only through SEBI actions that we come to know that X mutual fund had this issue, Y had this issue, and now sporadically it's coming in. So it's up to the trustees of the AMCs to put checks and balances and stringent guidelines of how to manage this kind of leaks, because at the end of the day, if the redemption happens, it's the investor who's losing the NAV and returns, and the bigger investors will bail out.
Why do we say that the guidelines aren't stringent as yet is my limited point as well, Sajid, because anybody who gets involved in such activities, and by the way, in some sense, it's not just an India problem. This happens across the world. It's happened in the most developed market as well, that insider trading is something that happens all the time. I'm just trying to understand, playing the devil's advocate here. What is it that is not so stringent about the guidelines with regards to mutual fund insider trading that can be made more stringent?
The simple fact is that how does these things come to light? Because it comes to light because of the audits that happen. And my assumption is that audit is basically that, you look at when you have placed a stock for purchase and at what price, and when you purchased it, what was the price differential. Right. That's how the suspicion starts, right? Because if you
so why can't they do it internally is what you're saying?
Yeah. Perfect. The point is not only internally but also compliances. If the stock has run up by 5% or 6% before a purchase has been done, then there is an issue with respect to how the stock is getting played in the market, right? So, that's something which is very well available to the fund manager, to the compliances, everything.
So, but to your point, Tamanna, about whether or not it's it is always one individual, but then it is a risk for the investor, and the investor, especially the large investor, is not going to wait till dust settles. They're going to pull money out, and there's going to be a reputational impact.
Then you have a domino effect in that case. I would just say one thing. Maybe Quant needs to come up with a more detailed explanation, more transparently. Just saying that there are some inquiries and we are good, so we're taking care of it, is not going to cut it right now.
Most certainly. I think that is an important point, because the statement also lacks, to my mind, lacks substance in some sense.
It's a holding statement.
It's a holding statement for a fund which is now actually 93,000 crores.
It's a $10 billion asset house.
93,000 crores of AUM, largely equity, right? Yeah. If you will. So therefore, this is important. Just one small piece that I want to lay, not that too many people have said it, but just very quickly mention it. Investors' money, aside of what happens to the NAV, but investors' money is not at risk. So for some messages floating around that what will happen, will the money that is there in Quant Mutual Fund not be redeemable? That may not happen. Now, liquidity issues led, if that were to happen, by the way, that's a separate argument. But your money that is put into Quant AMC scheme, if all of this turns out to be true, and Quant has said that there is an issue that they are dealing with, but your money is not at risk of not getting returned to you, please keep that in mind.
Yeah, and so the other aspect is, very importantly, of course, is that while the stress test, and we've explained how this works, we've talked about the liquidation of the most the illiquid assets first. Fund managers have gone on record to say that's not necessarily how that always pans out. Sajid, they will use cash first to the extent of 3.7, 3.8% of cash to take care of redemption requirements, and they will go to their liquid assets. We're talking about very liquid counters.
We're talking about 500 to 600 crores of cash, which is there in the small cap fund.
So brace for some impact today. Yeah. Some pain today, and we'll wait for more details to come in. Thank you so much, Sajid and Alex, for joining us on that big story. We've tried to lay it out for you with the facts that we have in hand. We don't want to create any panic, but we want to tell our viewers exactly what's happening, and that's important. And we want to do that with our next story as well. Abhishek Jain, partner and national head of indirect tax at KPMG India, with us this morning. Abhishek, very good morning to you. Great to have you on. We were keen to get a sense of the GST meet outcomes and the implications, in your view, that you see. Let me start with one key decision which has impacted markets, at least through the last week, which is fertilizers. And we saw fertilizer stocks run up, etc. Now, this has been referred to the group of ministers. What does this mean? Can we assume this means that essentially, at least the GST Council seems to be pretty positive on some kind of rate rationalization as far as fertilizers are concerned?
So rate rationalization, as the Honorable Finance Minister said, they have not taken many bold decisions on rate rationalization. And they said that they will wait for the recommendations of the GOM and they will take it up in the next meeting. So it's too early to say in which direction the rate rationalization would go overall, and also specifically for the fertilizer industry. So we'll still have to wait for the recommendations of the GOM, and then let's see what the GST Council does. Yes, but having said that, they're open to look at the rate rationalization, but we'll still have to wait for what the GOM says.
Abhishek, to your mind, what was the biggest takeaway? Because there was some move on, allied train services, some relief for hostel students, etc. What do you think was the big takeaway from the GST Council meet? Or did it seem like, the key decisions were left for after the budget?
No, I think several plethora of favorable decisions were taken, all benefiting the industry. The big one is the amnesty scheme for periods financial year 17-18 to 19-20, where for matters where fraud, suppression and all is not involved, if the taxpayers deposit the tax by March 2025, then the interest and penalty would be waived. I think this is a huge sort of relief. And the government realizes that the initial period of GST, there could be many areas where the law was not clear or people did not have clarity, and hence there could be non-payment of GST. But with interest and penalty, normally that is applicable. People are reluctant to sort of close these matters. But this is a good window for all the taxpayers to relook at all these matters. And wherever they feel that, yes, the tax is payable, they can just pay the tax without any interest and penalty. Having said that, anti-profiteering provisions, they've announced a sunset period after March 2025, which again, I think industry has been asking for a long time, because in the initial years of GST, when it was introduced, yes, the anti-profiteering provisions made sense because the benefit of GST needed to be passed on to the consumers. But after 6-7 years, I don't think that's really needed. So that's again a big benefit for the industry. Again, several industries like banks, insurance, corporate guarantees, valuation of import of services, reduction in the amount of pre-deposit for filing of appeals. So I think they've come out with several notifications and circulars, which I think would really help. I think the most important thing is that the government looks at the GST Council, looks very, very open, listening to ideas. The industry had filed these representations over a long period of time, but the government has considered most of them and come out with favorable outcomes in terms of clarifications or amendments in law. I think that's very, very encouraging. I mean, that also dictates how the government would go forward, have a view on these things. Of course, the good collections in GST have really helped, and the government has that elbow room.
Yeah.
But I think I was really, really encouraged to see so many positive outcomes for the industry.
Okay, so positive outcomes for the industry, especially in terms of easing the litigation process, I would say. That would be the big takeaway more than anything else. Abhishek, thank you so much for joining us and giving us an overview on why the GST Council meet was positive in the terms of the direction the Council is actually taking. For the markets, I don't think too much at all. And the run-up was irrational in the first place to expect that everything from online gaming to fertilizers will be addressed in the GST meet. That might be some time away. So thank you for that, Abhishek. We'll take a very short break. But on the other side, Agam will be joining us with the F&O setup for the day. Stay tuned.
Welcome. This is India Market Open. We're taking stock of the futures and options space, how things have panned out last Friday. It was a day of trade where we did see some amount of selling coming through, a lot of unwinding of positions as well. And that said, well, let's take a look at how the futures are panning out at the moment. We did see the Nifty come off by around 0.3%, and there was a lot of unwinding too as far as the futures are concerned, maybe to the tune of nearly 5%. The Bank Nifty, the picture was the exact same as the Nifty. In fact, we saw a knock of around 0.25% there, and the open interest declined by around 9%. So a lot of unwinding coming through as far as futures are concerned. As we move into the options market, well, naturally, considering the Nifty came off, we also saw a lot more writing around calls, which would include 23,700, 23,900, and even 24,000. Speaking of the 24,000 call, in your overall open interest distribution picture, that most likely will remain a very, very stiff resistance. And of course, on the lower end, continue to keep an eye on 23,500 puts and thereabouts, because we've seen a little bit of traction being built there as well. But let's talk about stocks then. And it was a day of trade where we saw a lot of selling. So we saw weakness in BPCL, HPCL, Grasim, Chambal Fertilizers coming off a good 7% as well, along with something like an ABFRL. Among stocks which saw unwinding, again, more counters which saw long unwinding and short covering. A lot of weakness in India Cement, GNFC, as well as Birlasoft. Question really is, what do you do with these markets? Well, let's get in expert opinion. We have Ajit Rambia of Ajira Ventures who's joining us on the show. Ajit, good morning. Thanks for taking the time out. Let's start with your view on the benchmarks. I believe you also have a strategy here.
Yeah. So good morning, Agam. Thanks for having me on the show. The markets are currently in a consolidation phase after experiencing a decent rally following the election results. So despite the consolidation, the overall sentiment remains positive, indicating that it is a buy on dips market. This means that the temporary declines present right now gives good buying opportunities. So in the near future, we are likely to see several good opportunities emerging as the market stabilizes. It's important to focus on fundamentally strong counters that have shown potential for growth. So speaking about the indices, Nifty has a strong resistance at 23,650, which is the recent top, and support at 23,350 levels. And in Bank Nifty, we have a resistance at 52,000 levels and a support at 51,300 levels.
But Ajit, based on that, I believe you are also deploying an option structure on the mid-cap Nifty.
Yes. Yeah, so we have a expiry today in mid-cap Nifty. So looking at the current sideways movement, we can initiate an iron condor strategy, that is 0DT, today's expiry, where we sell 12,150 calls and puts of the same ATMs, which are priced at 50 rupees. And we hedge them by buying 12,300 call, which is priced at 9 rupees, and 12,000 put, which is priced at 10 rupees. So here, the total premium that we receive is 82 rupees. And if it closes at 12,150, it is a sideways movement, so it can close at 12,150. We gain the entire 82 rupees.
Of course, given the fact that this is an iron condor, what Ajit is also doing is that he's, while he's selling the one strike options, he's also buying, options beyond that one strike in order to limit your loss. Because when one tends to sell options, well, naturally, theoretically, your loss can be infinite. And because you want to curtail your losses, well, what Ajit is also going and doing is he's buying the wings, as many option traders would put it. But Ajit, that's as far as the mid-cap Nifty is concerned. And of course, you're playing that strategy for the today's expiry. But moving on, you also have another view on Bharti Airtel. Can you take us through that?
Yeah, so we are bullish on this counter. It has given a fresh breakout. We can deploy a bull call spread where we buy this 27 June expiry 1400 call at 15 rupees and sell one our target price 1450 call at 4 rupees. So we can play the upside by buying the ATM calls and selling our target price, which is 1450 call. So the total cost of the strategy is near 11 rupees to gain 39 rupees possible.
Okay. All right. And of course, here the advantage is that while it is a position which is similar to your futures, but not exactly, because your upside and your downside is limited. But of course, in this case, it also saves you from a substantial decline should that come through in order to affect your risk at that in a similar manner. But Ajit, on that note, taking a moment to thank you for taking the time out, speaking to us here at NDTV Profit, or also giving us those strategies. Of course, we'll continue to track them. And the other interesting one that Ajit has spoken about is the mid-cap Nifty, where we don't very often see a strategy around there, but today we have one. So we will be keeping an eye on that one as well, based on the expiry today. With that, it's back to you, Niraj.
Thanks a lot for that, Agam. Let's take stock of what the market-wide moves could be like as well. Sony Patnaik, AVP at JM Financial Services, joins us right now on the show. Sony, great having you as always. Good morning. Thanks for joining in. How are you approaching trade today, Sony? The implied open suggests maybe a start which is about 75 to 100 points lower. Is this a market which is a buy on dips, or would you believe that there is a short-term intermediate pullback that could happen as well?
Hi, good morning, Niraj. Thank you for having me on the show. I think last entire week we saw market being in a consolidation in the range was 23,400 to 23,600, 650 on the upside. The consolidation was acting as a first trigger, the first signs of the bull run exhaustion. So I think from current levels, we may approach some minor profit booking can be seen towards 23,100 odd levels. And, it'll be good. In fact, it would be a healthy correction to see these levels getting approached, the earlier support levels getting tested. From those levels, one can reinitiate a buy. But as of now, from current levels, it's just, stay light on the positions. The correction can come up to 23,100. For intraday, 23,400 level is going to be the support to watch out for. It's not that immediately it breaks and you'll see the 300 points of correction coming in. It may happen so gradually, but of course, it's going to be a healthy correction to reinitiate any buy on dips sort of a structure. Talking about Bank Nifty, I think Bank Nifty is still the index which is holding a bit better and slightly comparatively, stronger than Nifty. So I think Bank Nifty 50,000, 50,200 can act as a good support. As long as these levels are not getting broken for Bank Nifty, any major correction or profit booking for Bank Nifty may not be seen. For Bank Nifty, outrightly, I think a buy on dips can work out, but for Nifty, we'll have to wait for some time.
Got it. Okay. Sony, in light of this view, one, are you initiating any index trade, Nifty or Bank Nifty? Is there a specific target, stop loss, etc.? And what about the stocks that you're recommending today?
For Nifty, I would initiate a sell. In fact, if it's able to break 23,400, 23,380 levels in spot, one can actually look for an intraday sell for targets of 23,300, keeping a stop loss of 23,500. So that would be a conditional sell only if the support level breaks. For Bank Nifty, I would wait for the support to come in and it will be a buy on dips, in fact. So for Bank Nifty, anywhere towards 51,000, 51,200 level can actually act as a buy on dip for intraday purpose. So keeping a stop loss or support of 51,000, and then it can bounce back towards 51,500, 51,600 levels. So I think that's how you can play in Bank Nifty, but both the indices, it's for the intraday basis.
Okay. What about specific stocks, Ami? Sony?
Stock specific also, I'll keep a balanced approach, one sell idea and one buy idea. The sell idea comes in Tata Consumer, which has given a fresh option chain breakdown below 1100 level. It has been facing very aggressive resistance towards 1120, 1130 odd levels. So keep a stop loss of 1130 in Tata Consumer and a target of 1060, 1050 can be seen. The second buy idea is in Astral, which we have seen on Friday's volatility. It held on to its, good support with fresh long positions added on Friday position. It has also seen a bullish engulfing candle patched on Friday. So from current levels and on any minor dips towards 2250 also can be bought, keeping a stop loss of 2200 and a target of 2360 to 2400 can be taken.
All right. News just coming in. Paytm is in fact with Skyscanner, Google Flights and WeGo for Paytm Travel. Paytm Travel has also onboarded 3 new carriers, including Cambodia, Angkor Air, Salam Air and Fly Dubai. Their Q4 flight bookings are 19% year on year. Paytm want to watch out in today's trade. Remember the news of Zomato buying their movie and ticket business, movies business really saw that stock climb up. This might give it some life today as well, in a day that could otherwise be tough for the markets. Vineet Bulinchkar, Head of Research at Ventura Securities, joining us now. Vineet, very, very good morning to you. Let's start by getting your sense on the day's trade today and how you see, and I'll start with the key sector which was in focus last week, fertilizer stocks. Post clarity in the GST meet that nothing's happening right now, but it will be referred to GOM. Do you see further profit booking here?
I think there will be profit booking and it will come out because it's purely a trade as such. That is number one. Number two is, these stocks are very, very cheap and, you can accumulate them on declines as they come.
So accumulate on decline in fertilizer stocks. Vineet, what about Paytm? News coming in that now they've tied up with Skyscanner and 3 other airlines, Paytm Travel. Now, as far as we know, Paytm is trying to focus on the core business, so Paytm Travel doesn't necessarily come into that bit. They are open to looking at selling bits of the business, as we know from their talks with Zomato. Do you think Paytm sees a further upside right now?
I don't think so. In the weak sentiment, I think Paytm can fall even further from here. We have just seen some kind of short covering, if you may call it, opportunistic buying. But I don't think there is much to be made out here. So I am removing this from our structured list that we track.
You're removing Paytm from your structured list?
Yeah.
Okay. So any view on Paytm before I get to the other stocks to watch today?
Hi, good morning. So I think here, technically, of course, it's not exactly looking very strong and there could be another round of profit booking correction that can be seen in Paytm. The support as of now is around 360. So, it's not very healthy. It can retest those lower supports of 360 on technical terms. Resistance for intraday is standing around 435, 438. So as long as these levels are not crossing, one should just avoid on any fresh longs at current level and wait for the support levels to get tested.
Okay. Well, that with regard to Paytm. Vineet, I heard you mention that there is a bit of a corrective move. So I'll come to that in a moment from now to talk about that. But since you're on the topic of stocks, I just want to get in my colleague Mihika to talk about the key stocks that might be in focus based on news flow. Mihika, good morning.
Yes. So up first we have Prestige Estate. The board has approved a 5,000 crore QIP, and they've also approved the monetization of their hospitality assets through a share issue. Now the monetization will involve issuing shares through primary or a secondary route, and the board has given the consent for the initial public offer for the hospitality business as well. And the parent Prestige Estates will remain the major shareholder for the hospitality arm. Up next we have Ami Organics. Now they've issued and allotted 32.3 lakh shares to the eligible QIB. Now their approved allotment at an issue price of 1,240 rupees per share, and the share issue aggregated a total of 400 crores. The issue opened on June 18th and will close on closed on June 21. Around some of the key allottees was the government of Singapore, who was allotted 14.46% of the total issue, whereas we also had HDFC Mutual Fund and Kotak Mahindra Trustee that acquired 6.25 and 12.5% each. We also had White Oak Capital that was allotted 5.37%, as well as SBI Healthcare Opportunities Fund that was allotted 16.25% of the total issue. And lastly, we have Aster DM Healthcare. Now, the Olympus Capital Asia's Investments has sold 9% stake at 340 rupees per share, and they held 10.1% stake as of March 24th. Now, when we talk about the key buyers that were a part of this, we had Morgan Stanley Asia, who bought 1.33% stake, as well as Franklin Templeton Mutual Fund, who bought 0.63% stake, and lastly the government of Singapore, which bought 0.52% of the stake.
Interesting. GIC coming into Aster, clean out trade being absorbed by some marquee names as well, which is why the stock did what it did. in Friday's session. Mihika, thanks a lot for that. Now, Vineet, just before we move ahead with specific stocks, I heard you speak about how, did you use the term corrective phase? If so, why did you say that?
So a couple of things. We've seen a tearaway rally coming in from the 5th of December, 5th of June after the results were announced. Two things. One is we are seeing how Telangana has completely, done a 31,000 crore kind of farm waiver. It implies that every state, wherever the BJP is going to be there, they will have to forsake do this because the competition is so aggressive. And given that, one thing you can be very sure of that, with 4 impending elections, we are going to have a very socialist or a populist kind of budget. And that is going against the 10 years of building of narrative that the present government has done. It's going to be very difficult to manage the fiscal along with the populism that is going to creep in. So to my mind, I think we will see a derating of the multiple. If you see from June 2014 till now, every month the P multiple has been about 20. And that has been purely because of Modi coming in and doing what he has done. But now with the compulsions of the changed environment, I think we could see a slight derating of the P. And accordingly, I think our valuations are stretched too far, too fast, and they will come off of it.
Vineet, just talking about the farm loan waiver scheme that Telangana's Congress run has announced, and this concern that now competitively other states will have to do it, maybe BJP run states. Maharashtra, for example, goes into elections and they haven't done very well in Maharashtra. If that does come through, does the impact now sit largely with PSU banks? Where do you see the actual impact of this falling through? Because at the end of the day, it's a bill that banks will have to pick up immediately and then states pay for it. So how do you see that flow out apart from the overall negative sentiment?
So I think that is where the PSU banks have fallen off from the PSU basket. Secondly, I think the defense stocks are, very richly valued. They've got a lot of business. But, if you were to take one of the PSUs, barring for HAL, if you were to take some of the PSUs and you do a cash flow present value analysis, you'll find that these stocks are largely overvalued. So my guess is that we could see some selling come here. So, PSU banks might not fall too much because, they're still not that expensive. They're at just less than one-time book. And, whether you actually iterate a sell on these stocks, we will see when the results are out.
Okay. Well, some valid points as well. And I think what Vinita said is important. The only thing is let's see how soon and how swift can something like that happen if it were to happen. Remember, investing is all about building a hypothesis and then testing it. This is Vinit's hypothesis. Let's wait and watch how this shapes up. Keep an eye out for some of the holdings that I think Alex and Sajid were talking about, which are owned by Quant MF as well. And could they come under pressure today? I think especially the ones in which there has been some recent buying. And we certainly will keep an eye out for that. Tamanna, from an RBL bank to a Keystone to RT Pharma Labs, Adore Weldings, Hoback, there are a lot of things in which stocks have gained quite significantly because Quant was an active buyer and they've developed that reputation about outperformance. Wonder if some of them come under pressure today. So should be interesting to watch out for.
In terms of a timeline, if there was redemption pressure, it would take 2 to 3 days to play out. But you would start seeing the reaction already, one presumes.
Yeah, very likely. So certainly something to watch out for. We need to slip into a quick break and be back with the pre-open session. It looks like a start which is maybe 100 points in the red. Let's wait and watch.
back. You're watching India Market Open. So we're set for a tough day of trade, but nevertheless, where are the opportunities in today's market? We're speaking with Soni Patnaik and Vineet Bolinchkar on this. Soni, let me come to you with one sector which seemed to have bucked the trend, at least in Friday's trade, which was IT stocks. Now, a number of reasons for them. Maybe Accenture's numbers did not look that negative in relative terms. The sectoral play was seen in IT. Do you see some of that trend continuing, and anything you'd pick up in that space?
So IT is going to be a accumulation zone as of now. We believe that it's not going to show you an immediate results, but of course these stocks on specific individual levels, they have come to such a range where one should actually start accumulating in those stocks, especially large cap IT, and you can see a move coming in, perhaps like a positional play. So for example, if we just talk about Infosys, which is at a very good level on derivatives data, we can see it has got a very strong support of 1500 levels, 1480, 1500. That range is very, it's quite attractive one to accumulate at this level. The stock has the strength. It can show you higher levels of 1600, 1650 odd levels. It will become a positional play. So I think Infosys is one of those large cap IT stocks where one should accumulate at current levels, starting from current levels to 1500 levels, keeping a stop loss of 1450 and a target of 1600 can be seen.
All right, so that's the take on IT stocks, at least on the charts. Vineet, are you sort of positive on IT stocks right now when everything else is looking a little gloomy?
So, I've been a bear on IT stocks. And as weeks go by, we keep on hearing of, positions being liquidated in the US. The need for IT professionals is coming down very sharply. A lot of businesses moving to India, but it's very low value. And I'm not very certain as to, how this thing will move. So having said that, I think, instead of IT, why don't we buy FMCG and pharma? They are relatively there. They're going to be stable. They're going to be persistent businesses. So, for me, IT is a flash in the pan, and the other two export sectors look more promising. I mean, consumption and pharma exports.
Mm-hmm. Okay, Vineet, so what within that? I mean, let's assume that people buy this argument. What is it that can happen? I think that is the key thing as the pre-open trade's about to kick in. But what is it that you like within these buckets?
So FMCG, I think HUL could be an interesting play. It's very undervalued. It's a pan-India play. Second that I like among the pharma stocks is I like Eris Life Sciences. I've spoken to you about this earlier. So these are some of the high conviction bets that I'm going in on the market.
Okay. Eris Life. Sorry, Vineet, for people who may have missed it the last time that you'd spoken about this, can you just lay out the reasoning for Eris Life Sciences?
So Eris Life Sciences, very simple. They have grown their business through acquisitions. They continue to sustain top of the line margins, and they have bought businesses which erstwhile promoters have found it difficult to grow, and they have excelled at that. So I think there's tremendous administrative skill out here. They know to pick and choose their portfolio of ingredients which they feel can do well. And they've always insisted on having high value products, which they've done relatively well. So recent is the biosimilars that they bought from Biocon. I think they can do a stellar job there too.
Okay. Well, watch out for Eris Life Sciences as well. The pre-open rate's kicking in, and we'll watch out for, like we said, some PSUs, and let's see if there is a bit of a pullback, large holding at Quant's end there. Of course, some of the recent names that we spoke about will also be in focus. For now, flattish, but let's wait and watch how it shapes up. The other thing to watch out for might be what happens to Ujjivan Small Finance Bank, right? Amongst others. There is Car Trade, there is Ujjivan, there is TBO Tech and a bunch of others. But Ujjivan certainly remains one stock that you want to keep an eye out for, simply because they've reduced the guidance quite significantly. And even the quality, because they've mentioned how ROEs will come off as well as credit costs will go up. Plus this whole farm loan waiver thing also hits. Vineet, to both Vineet and Soni, but Vineet, to you first. Ujjivan SFB, what's the impact? And because of this farm loan waiver, you mentioned that there could be populism at the government level, which is fine, which we'll know when it happens. But on an immediate basis, would the MFI stocks come under pressure?
I think this certainly will, because their loans are very high cost. And when the government is waiving off farm loans, they would think it is their birthright to not pay up. So collections, so while you have to pay up, but what can happen is collection delinquency can go up. So if your collections go below 90 to 93%, then it starts hitting your bottom line. You've got high multiples and you're into a very, very granular business from where recovery costs are extremely high. So I think that will also be a kind of a fallout of this, a natural fallout, if I may say.
Just one. Sony, you want to come in on some of the MFI stocks as well?
I think, of course, all these stocks, I won't be able to keep a track. But since we spoke about Ujjivan here and charts are in front of me, it looks weak on charts as well. It has seen the actual breakdown on technical chart levels, and one can see lower levels of 42 and a half getting tested. Any fresh upside should only be considered if it's able to cross a resistance of 52. So one should definitely wait out for the resistance to cross and, just not enter at current prices, as it can test the lower support levels.
Right. I was just taking a look at some of those PSU names. Union Bank, Indian Bank, AU Small Finance Bank, just trying to see if IDBI this morning, trying to see if there's some impact on this Telangana farm loan waiver that we see. Let's pull up some of the bigger ones also, Bank of Baroda, State Bank of India, and see what's happening there. Bank of Baroda is okay, flat. State Bank of India will also take a look, smiley in the red. So not too much of a knee-jerk reaction in the first few minutes at least, but Union Bank definitely down. Sony, just wanted your take on some of these PSU banking names on the charts. Are you expecting a painful morning?
Certainly, I think overall you can see some profit booking, some correction overall can be seen in few of these stocks. Of course, not a lot. I think hardly 2 to 3% of that move can come, which can actually get these stocks into a good level one to reinitiate any long sort of a strategy. So I think it's wise just to be patient and let the dust settle down. And when you see the fall of 2 to 3%, it's in such stocks, just strategize how to go about a long side of it. Especially if we talk about stock like Bank of Baroda, which is actually looking quite strong on charts, and of course it has an immediate resistance of 280. So I think one can just wait for a support of 272, 270 odd levels to get tested to reinitiate a long from where it can rebound again to 280, 285 levels. So I think that's the kind of strategy to go for, which would be a buy on dips.
Okay. So that's the case as far as Bank of Baroda is concerned. I want to take a look at some of the fertilizer names. So what's happening with RCF, what's happening with Chambal, Deepak Fertilizers, FACT, all of the FACT at least down 4.5% in open trade. So is RCF, so is Deepak. Now, Vineet, you were mentioning that these are at least cheaper stocks. If we are going to look at, and just the flip side of the whole Telangana farm loan waiver, if you're going to look at a sustained rural push, what are the kinds of companies that actually benefit from this?
So obviously it's going to be the fertilizer stocks. And I think my money would be there more on the agrochemical story. So I believe that the agrochemicals and the specialty chemicals and the general chemical and pharma stocks will start crawling up in that manner over the next few months.
Okay, so those are some of the stocks to look at this morning.
Yeah, well, certainly some fertilizer names looking slightly wobbly as well. And 7% as of now for fact. I wonder if the RCFs, Chambals of the world, as the pre-open rates are settling down, are also looking slightly wobbly in the session. Yes, most of them looking that. So in that sense, fertilizer names certainly under pressure. So that is one pocket to keep an eye out for. Now, there are other things to monitor too. Firstly, a key brokerage note. So we've spoken about Tibiotech on the trade setup. Now, Goldman Sachs, the reason is because Goldman Sachs has initiated a buy on the company, and they have spoken about how they expect some reasons why the stock could actually do very well over time. Harsh joins in with the key details of that note. Harsh, good morning.
Hi, good morning, Niraj. This is a stock, a company which is into B2B travel. It's a B2B travel platform, just for perspective on what the company does. In terms of the positives that Goldman sees, what they're suggesting is they're exposed to a large and fragmented total addressable market. The strong execution track record, mind you, this is a profitable company despite it being listed as well as in one of those new age businesses kind of category. Also, asset light balance sheet, negative working capital, and strong free cash flow. In fact, free cash flow is above PAT. So more than 100% of PAT is actually free cash flow, which is very positive. There's also low competition and regulatory risks in the area in which the company operates in, very unlike some of the other new age tech companies, maybe the Paytms of the world. Now, in terms of what Goldman is anticipating going forward, strong growth seen up to FY24. We've seen a healthy revenue CAGR, 25% plus. They are continuing to expect that kind of a number even going forward. 22% revenue CAGR is what they are penciling in from FY24 to 27. And they believe that free cash flow to PAT will continue to remain above the 100% mark. They are valuing the company at 32 times FY27 expected EPS. So certainly not cheap, but nonetheless the upside is very strong. 24% upside to current market price is what they are starting to pencil in. 1970 is the target price. Risks always there. Headwinds from the shift to online, any headwind there could be a risk. An increase in competition, a new player entering could also be a risk. Change in supplier terms could impact margins as well, and a slowdown in global travel could also be an imminent risk. So some of those risks to be kept in mind, but nonetheless a 24% upside, very strong.
Well, and certainly the upside is strong, and thanks Harsh for pointing that out. Let me first take a chart question, Sony, with you. The stock in the month of June has gained a little bit, if I'm not wrong. But are there charts to show what the stock can do?
I think, if we look at the charts, of course, it's looking sort of a strategy where one can actually apply for, just wait for a small correction, a small, minor correction that can be seen to initiate your longs. I think that level will stand out somewhere around 1600 to 1580. Not a lot, just wait out for those levels to see. Not a lot of chart patterns can be seen from current levels. So maybe the support, if it gets tested, you can, buy from those levels for it. It can bounce back again towards 1700 odd levels. Current level, it's a bit risky just to enter fresh longs. Just wait for that small dip to come in to buy.
Okay, watch out for TBO Tech, 16504% high as the pre-open rates have settled down. Just trying to see what else. So if we can get the Nifty 50 winners, or losers, if you will, or more losers than winners today. There is Sun Pharma, which is in the green, talking of that very large drug opportunity, which Natco and Biocon have also launched or are in the fray. Wonder if Natco and Biocon are also trading in the green today. So that's one set of stocks to watch out for. Natco marginally at that, Biocon flattish. The other one is Ultratech, which is probably in the green. But the losers are thick and fast. There is autos in Hero MotoCorp and a few others, but banks predominantly, which have come off in the session today. Private banks too, HDFC Bank, Kotak Bank, etc. are down. We need, for people who bought into some of these banks, HDFC, Kotak, etc., when they were maybe 15% lower, if you will, is the rally baking in near-term positives in terms of the growth that they will do versus the credit costs and the NIMs, etc.? Or do you believe there are long-term stories which should be kept in the portfolio?
So I believe that the consumption will play out in India because of the populism that we have spoken about. FMCG will gain, and at the cost of sectoral rotation, the private sector banks will do well. Because, if you cannot park your money in SFBs, if you can't park your money in microfinance lending, where do you go? So obviously that allocation will move towards your Bank of Baroda, which is an industrial bank, I believe. And the others are your private sector banks.
Garden Reach doing well this morning. We had flagged off this stock. They have orders worth 450 crores, at least in the pre-open session. Suzlon also another good day, but 4.5% up. Vineet, keen to know your view on Suzlon. Of course, the stock got its initial sort of boost because of the cabinet decisions, which are encouraging, wind energy and offshore wind energy, literally giving some viability gap funding to two specific projects. But do you think Suzlon is something that could be looked at closely?
Definitely, it's one of our better picks in the renewable space. Still not widely gone up like the rest of the solar packs. And between solar and wind, there is certain level of moat around, the windmill manufacturers. So I believe that Suzlon should do very well from here, can even double in the next 2 to 3 years.
What is your take on a Suzlon?
Suzlon, of course, with the gap up opening that we can see, it will be important for it to continue with the gap up and not give away the gains. And the closing for today above 53.1 is going to be quite crucial. One can see it from a medium-term perspective that there was a good breakout witnessed on Friday with good volumes continued for the long side. The long side targets can be seen towards 62 to 64 levels from current level, and very strong support 49.5. I think that should hold.
Okay, so Suzlon, you're positive on. Are you also looking at Garden Reach, Sony? And let me add on any of those other defense names that have been running up. Garden Reach for a specific reason and could already be seeing some of a run up as soon as we open. But what about a Cochin Shipyard and a Mazagon if I had to add to that?
I think Garden Reach technically is looking quite strong because the breakout that we had seen 3 to 4 days ago, the level was somewhere in the range of 1530, 1540 levels. It is holding on to those levels even in the last 3 days of the correction of the volatility market that has witnessed. So from current level, it looks strong. It can retest the higher levels of 1900, and any move above 1900, you can see it heading fresh levels of 2100 as well. So I think one should definitely hold on to the stock in Garden Reach, trail your stop losses to 1550 and just hold with that support. It should test the higher levels of 1900.
Stay on, both of you. We'll just take in opening thoughts post-market open. Keep an eye out for what some of the oil sensitives do. Maybe not as much. Keep an eye out for the quant sensitives as well. Remember, what we are merely saying out here at NDTV Profit is that Quant has said in an email to investors that there is SEBI queries that have come in, and because of some nervousness, some of those holdings could be under pressure. The likes of RBL Bank, the likes of Nalco, Reliance Industries, Bikaji, Aegis, and a few others. Markets start off about 0.5% lower on expected lines, really. Maybe slightly worse than expected, but in or around those levels. So 0.62%. And banks, 25% of the holdings in financials, as per the index per se. Banks under a bit of a pressure today as well. Mid caps and small caps certainly taking it on the chin. I think this is not necessarily what's happening around the world which is impacting, but a bit of a localized event. Let's see how much further during the course of the day. For now, in the first 1 minute, we are about 0.5%. Bring up the heat map. A lot of red, very little green, as expected again. Cipla corrects about a couple of percentage points. There is Tata Steel, which corrects a little bit in trade today. IndusInd, Adani Ports, SBI, Adani Enterprises. A clutch of those names have gone off. What is doing okay are maybe, just maybe, some of the defensives. Sun Pharma is news to itself, by the way. So that is fine. On news of targeting on the cusp of a very large opportunity, maybe they get it, and that's why that stock is up. But look at ITC, Wipro, HUL. You would reckon that there's a bit of a defensive bent on open at the markets today in the large cap space. I would suspect that will probably happen in the mid cap space as well. And I would suspect, actually, it's very easy to guess, Tamanna, that the market breadth at the broader end of the spectrum will be very wobbly.
Yep, metal is also doing badly today. So you're seeing some profit booking there in sectors which were, okay in the last couple of sessions. But we should pull up the top sectoral indices before we get to specific mid-cap and small-cap indices as well. So let's just look at that. Yeah, PSU banks aching today, and no surprise there. We've been talking about the impact of that Telangana farm loan waiver, at least sentimentally. Metal stocks, reality. So that's where the hit really is. Bit of a defensive play, okay, on FMCG, because if there are farm loan waivers, then more money to spend on FMCG products, very simply put. Let's take a look at what the small cap and mid cap indices are doing. this morning, and you're seeing equal amount of pain there. The Nifty mid-cap 150 down about 0.5%, not so much on the small cap 250. Specific stocks that we're tracking, Ujjivan Small Finance Bank is one which is on our radar. We talked about it. Negative news for it because they have actually reviewed their guidance outlook for FY25 and downward on all trends. So that's not something that the street is going to like. From credit costs to growth, all those outlook have been reduced. So have ROE. JSW, their unit, Neo Energy, has got an LOA for a 300 megawatt wind solar hybrid project, and that is a positive in opening trade right now. Let me look at TBO Tech. We talked about this. Goldman Sachs has an initiating coverage on it right now, and they've looked at a buy call with 1970 rupees at a 24% upside. Garden Reach Shipbuilders is something that we flagged off for you as well, 450 crore order. So while you're not seeing too much of an impact on other defense stocks, relatively HAL was okay up, but Garden Reach 6.5% up, so that's having a good morning. Prestige has seen a fundraise about 5,000 crores, as in the board has approved a fundraise of 5,000 crore rupees. They've not done it yet, but they've approved it. That stock about 1% up. Otherwise, real estate not doing so well. Cipla and Lupin I wanted to pull up on the pharmaceutical play. Both are in news for the wrong reasons. In Cipla's case, the US FDA has seen an inspection at the company's manufacturing facility in Goa, 6 observations there. In Lupin's case, they have received an establishment inspection report from the US FDA at their Somerset manufacturing facility, but that stock in the green today because nothing very clearly negative. Biocon is the other one I wanted to see. The EMA has approved their new facility in India and renewed a certification for them in India and Malaysia's sites. Biocon also mildly in the red as far as pharma is concerned. So I would say, Niraj, very careful trade this morning with a downward bias. Fall of any sort.
No, thankfully not a free fall at all, and which is maybe a good sign. Initial thoughts, Sony. We'll talk about specific stocks, of course, but the market deserves a mention. How are you viewing this open?
I think, the gap down we can see. However, there's a good recovery in some of the stocks, so which can contribute to the index as well. But talking about just the levels, I think it's still not exactly that, healthy just to go for a buy as of now and wait for that correction to happen. There can be a resistance around 23,450 for intraday basis as it has opened significantly below that level. So until and unless the 450 mark is not crossed, just wait out on it. There could be a sell on rise pressure that can be seen in markets going forward.
Okay, could be sell on rise pressure that could be seen in the markets as per Sony. So that's one consideration for sure. The Nifty 500, the BSE 500 as the case may be, either of the two indices, and just trying to figure out what are amongst, Tamanna has marked most of the main movers in trade, but if you can just pull up that Nifty BSE 500 winners and losers chart on your screen, and you can see some of the stocks. So Privi, specialty, which had a big move in Friday's trade too, is at the top of the pile of the BSE 500 on the gainers list. Delta is the top loser. A little surprise really, nothing came out in the GST meet for gaming, didn't even make it to the consideration stage, and that stock is corrected quite viciously. Swan Energy is the other one which is corrected about 4.5%, but Ujjivan takes the cake, 6.5% lower, and not surprising at all. What has done well though, Vineet? I want to talk about the green because we know the losers, but railway. And there is another 7% up move in Titagar. There is a 7.5% up move in Railtel, which is up 7.5% too. We have Jupiter Wagons today coming in as well. So we need two questions. One, are you constructive on railway stocks even now after the manic mammoth up move that they've had? And if you had to ask one question to Jupiter Wagons, what would that be? Vineet, you're on mute. Vineet, you're on mute.
My one question to Jupiter Wagons would be, how do you manage all this? I think stellar growth, they're really doing well. They played their cards very nicely and they're well positioned across all the spectrum that they operate in. But having said that, I think the stock is a little bit expensive. and can come off short term, as we have been stating since morning. That is number one. Railway stocks, as far as I am concerned, I think, as we spoke about the rotation among the high growth sectors, which is defense, PSU banks, and rail. So I think rail is something where the money is now going in. It's a rotation happening. But I think eventually this will come off. However, I believe that Titagar and the other forging stocks have got another leg of growth still left in them.
Okay. Well, but those stocks are up and active for sure. By the way, the other one which has had a really strong move is RK Forgings. Just look at that. It's also a quasi-railway play too, auto ancillary railway play. But RK Forgings is up 5% today. And if you just look at the last few days, RK Forgings has had a significant up move in the last 5 or 6 trading sessions. It's been a rank performer, if not an outperformer. Sony, anything on a Jupiter or a Titagar Rail, which is up 7% today, or a Railtel, or even an RK Forgings?
I think, the stocks that we can watch out is for Railtel, which is clearly continuing with the upside breakout level, and one can see it heading towards 525, 530 level. I think the stock is significantly stronger than the rest, and just hold it with a good stop loss of 490 for the day, and 525, 520 levels can be seen.
Okay. By the way, a stock that Tamanna had spotted on Friday, Raymond, is up another 4% today. Now, they've gotten this approval, I think, for this whole demerger that they're wanting to do, but 4% higher. A lot of reports had spoken about undervaluation a couple of quarters back. Since then, the stock has had a bit of a rally. And Raymond is, of course, up for different reasons, but some of the apparel companies haven't done too badly either. Vineet, any thoughts on Raymond? And if not Raymond, any of these other apparel companies? There is an SP Apparels, there is Gokaldas and a few others. Do you have coverage there?
Yeah, we like the export theme as such. Manufacturing export is going to play out very strongly in the coming few quarters. So there, Gokaldas exports, Arvind Mills, and the other stocks who do job work look very, very extremely good.
All right. So Raymond perhaps is also, the concerns about what the internal issues and the divorce will do to the board may be easing right now. There was an IIAS sort of warning on it, but investors don't seem to have taken heed. So Raymond is one to watch out for. One of the top losers on the BSE is also Delta Corp, because it was being expected, I'm not sure why, but it was being expected that there would be some relief on GST on online gaming. Clearly that was not even taken up in the meeting. So that is seeing sort of a hit. All of those GST stocks, actually, we spoke a bit about fertilizers, but yeah, those are taking a hit as well. Sony, on Delta Corp, any view over there?
I think this stock, of course, once it was out from the F&O space, not exactly a stock that I've been tracking, but of course on charts immediately, I can see that it is trying to bounce from the 50 EMA today, which is at around 125.5. So that could be the immediate support to watch out for. But there's a resistance which is around 200 EMA, and that level is at 141.7. So not a lot of upside from current levels. So rather just avoid and wait for the resistance to cross to see any further upside towards 150 plus levels.
Yeah. All right. So that's the story with the Delta Corp. Nothing much happening over there. I just want to talk about a Zomato as well. And Zomato, every second, third day, you have some note or the other talking about how they're so excited about Zomato, very positive on Zomato. I'm just wondering if now we have gone into the territory where all of the possible positives are already priced in. Vineet, keen to know your view?
No, I think, Zomato is one of my stocks which I will hold for the next 10 years. So I don't see anything going wrong with that story unless they do something extremely stupid. They've built a great last mile distribution, and all you have to do is add domains to your basket of offerings, and you keep getting the next leg of growth. Pan-India, they have hardly, even scratched the surface. They will be expanding via pin codes, via geographies, via districts. So the growth opportunity through distribution and addition of products is going to really play out well for them.
Okay, well, next 10 years. You don't hear too many 10-year calls. We need any other 10-year call?
I will tell you next time.
Sorry, come again?
I will talk about that next time.
The next. Okay, fair call. We'll talk about that the next time. There are no 10% movers today, so that's the other thing to keep in mind. Okay, Sony, normally people don't associate very long-term calls with charts and derivative positions, but I would love to know that. That's my last question to you today. Anything that you, based on your chart analysis and derivative positions, would want to or looks very attractive from a slightly longer term perspective, whatever that long term definition might be, Sony?
Definitely, I think you've already highlighted that we do not look for a long-term chart, but then, of course, from a medium-term perspective, auto space, Ashok Leyland is something that has caught my eye. So that will be a good level of 200, which is a very strong support. Current level to 220 can be the range. One can accumulate Ashok Leyland, keep a stop loss of 200, and the stock can test higher levels of 280 to 300. So that's a medium-term perspective, and the stock is a good accumulation zone. Just buy it on 5 to 8% of a dip that can be seen. Keep a stop loss of 200.
On dips, remember that's the point that Sony is making for Ashok as well. Okay, my last question to Vineet Bulinchkar is this, Vineet. We have a Century Ply coming. There's a lot of talk of how, because the inventory levels in real estate have now gone so low, 15 months, 14 months as the case may be, that now fitments, refurbishing, etc. will all come into play, and building material companies will now start seeing growth, which they haven't seen despite real estate sector seeing a growth. Do you buy this thesis, and therefore is there a positivity for players like Century Ply or others?
Yeah, the consumption story within building materials looks very attractive. I like one stock which is called Responsive Industries. Not too many buyers on that stock, and the stock is pretty expensive on a optical basis. But I believe that over the next 3 years, this stock can give you about a 50% return in even in a bear market.
Okay.
Yeah. Sorry.
Vineet and Sony, take a moment to thank both of you for joining in today and giving us your thoughts. Really appreciate your time this morning. Some very interesting stocks discussed, Tamanna.
Yeah. Oh no. Thank you. Thank you so much for joining us. All I wanted to point out, Niraj, was that we're seeing some recovery in the markets before we hit into that break from the morning pain on the Nifty as well. So not as bad as where we started. Mild recovery there. And ICICI Bank showing some smart moves as we go into that break. So while banking stocks overall are under a bit of pressure, ICICI Bank seeing some good moves there. So are ITC and HUL. So on the defensive side, I would keep an eye out on some of those FMCG stocks as well. Nestle also in the green. We'll take a very short break. On the other side, we're joined by Century Ply's Executive Director, Keshav Bhajanka. Stay tuned.
We're back with India Market Open right here on NDTV Profit. Now, one of the notes that we read recently spoke about how real estate inventory is down to about 15 months. It's a note written by Kotak Securities, wherein they cite how they believe the upcycle might continue. I believe it was Kotak, and how inventory across major metros have come down to 15 months. Now, what this means is that because new sales are happening or will happen thick and fast, it might spur the demand of the real estate ancillaries as well. Now, key player out that in that bucket is Century Ply. They, by their own standards, haven't had the best of the last 12 to 18 months relative to what they used to. And I believe in a conversation with Keshav Bhajanka a couple of quarters ago, he had spoken of the possibility of how things might start turning FY25, though they themselves have done okay, not as well as the past. He joins in right now to talk about how FY25 and beyond could be like. Keshav, great having you. Thanks for taking the time out. I hope all is well. Niraj here, good morning.
Good morning. Thank you so much for having me, Niraj.
Would love to understand, Keshav, do you, you must be looking at what happens to inventory and thereby the impact on demand for products that you and your peer sets and some of the other companies manufacture as well. What's your thesis around this?
Well, firstly, let me say I completely agree with what you were saying. You know, in the past year and a half has been a little difficult because inventory in real estate had started to sell, but it wasn't being handed over. As you know, our products come into use when we go from a house to a home. But now we are seeing traction on the ground. Now, as those units near completion, the demand traction on the ground is better. And I think we are in for a relatively strong year.
Okay. So, Keshav, what are the sound bites like? I mean, how is the demand scenario like? There is so much of talk around how urban versus rural is. Maybe it doesn't impact your company. Maybe it does. Would love to understand what is the situation on the ground and how do you foresee it to be when you're saying that it promises to be a good year?
So, you know, our segmental guidance has been that for plywood, we are going to grow at 10% plus, for laminates, 20% plus, and for MDF, 40% plus. For particle board, given the new capacity is going to come into play by Q4, we are looking at 25% plus. So I think the new capacities that we have added have actually come on board at absolutely the right time. As this lift-off takes place both in urban and rural centers pan-India, we are likely to get the benefit of the new MDF and laminate capacity. And in plywood, as you know, we have been doing reasonably well. This year, we're going to do better.
Keshav, hi, good morning. Tamanna here. The pain point
Good morning.
Good morning. The pain point of higher input costs, which you couldn't, really pass on. Does that pain point persist through FY25? And, we see that in some of your guidance, at least as far as laminates are concerned. You see that continuing?
So as far as, laminates and plywood are concerned, I would say that our ability to pass on these cost increases in the form of price increases is much higher. In laminates, actually, the reason for the lower guidance is that we are coming on stream with our new capacity in Andhra Pradesh. And as you know, the new capacity will take a little bit of time to ramp up. In plywood, we are fairly steady with our guidance of 12 to 14%. In MDF and particle board, the ability to pass on this cost increase is limited by imports and by the competitive intensity in the market. So I think, at least for the first half of the year, the margin guidance will remain at 15%. Of course, the attempt will be to increase it towards the second half. But for the entire year, guidance at the moment is 15% for both MDF and particle board.
Right. Just talking a bit about MDF specifically, because that's a big market. What's the outlook there? Do you see that growing, more imports coming in?
I think MDF is already growing at 20% CAGR, and it has been doing this for the past few years. As the middle income segment grows and the demand for affordable furniture keeps increasing, I think the Prime Minister has also announced new schemes towards affordable housing. Going forward, MDF is likely to continue growing at the same pace or faster. For us, we have doubled our capacity as of this quarter, as of the end of last quarter. And I think we are going to see the benefit of that this quarter onwards itself. Of course, for the year, we have an ambitious growth target of 40% plus, but I'm confident we'll be able to achieve that.
Keshav, new capacities on stream is one. What about current capacity utilizations? Do you reckon that better capacity utilizations might not just help in growth, but also in the margins and the ratios as well?
Absolutely. I think, higher capacity utilizations are going to help us. The new capacities will take time to turn profitable. As you know, any new capacity will not turn profitable from day one. But in the existing capacities, the only way that we are being able to maintain or achieve the margin guidance that we have given is by virtue of this increase in capacity utilization. If we weren't able to grow our market share, I think the margins could have been even lower. But thankfully, due to this increase in both sales and in market share, we should be doing relatively okay.
So I'm looking for a number, Keshav. You've given me segmental numbers and MDF, etc. look very impressive. But overall, based on what you've done for FY24 in terms of revenues and profitability, relative to that, let's say 4,000 odd crores on revenues, right? And PAT of about 325 crores. Where do you reach in FY25 as an entity, not segmentally?
I think overall profit will be a shade lower, like I've said. But in terms of total revenue, we'll definitely be at a 20% plus growth. 20%
plus growth with a the other question is what about pricing? And correct me if I'm wrong, but I believe in the past we've spoken about how some of the imports on specific pockets had also hit the industry. If I'm not wrong, is that pressure out of the way, Keshav?
No, you're absolutely correct. For MDF and particle board, imports do play a role. And we were likely to see BIS being implemented from February of this year, which would have helped a lot because the imported material is of a lower quality than domestic material. That is why it is price competitive. However, BIS has been delayed till February of next year. From February onwards, I think the import pressure is likely to be much, much lower. But at the moment, there is definitely import pressure, which only affects, again, the MDF and particle board segment.
What are the biggest sort of segments that you're looking at for FY25 and the biggest markets, Keshav? Because at the start of the conversation, you made a very interesting point that all of that inventory which is being sold now nears completion. So people actually start the activity of furnishing their homes and then buying your products. Where are you seeing the largest growth pockets?
So to be honest, we're seeing growth pockets all across. As you can see, in all our products, we have guided for reasonable growth. In MDF, we are seeing a much larger share of the southern market because our new capacity has come on stream in Andhra Pradesh. So as you know, the older capacity is in Hoshiarpur, which is far north. So our ability to service the south was limited in the case of MDF. So now we are a pan-India player in MDF, which is going to help us gain a lot of market share in the south. Other than that, we are looking at good growth both domestically as well as in exports.
And in terms of consumer tastes or demand or, buyer tastes and demand, are you seeing the focus on MDF and laminates and, some of these products increasing by and by that helps ease off the fact that timber costs are going up?
I think that, every product is doing relatively well in that particular segment. MDF is growing faster for the single reason that it's a cheaper product, it's a cheaper alternate to plywood. And now there is capacity available in the market. Perhaps earlier we were limited by capacity. With regards to laminates, definitely laminates has been doing well. Plywood will also grow reasonably well. In plywood, I am fairly confident that the organized sector is going to do much better because the unorganized is drafting far more with the cost increase than we are. So overall, I would say all segments are likely to do well, but you're absolutely correct. MDF will grow faster because the CAGR of MDF has been 20% plus and it is likely to continue in the same way.
So are you seeing demand for ply then coming down and prices of ply going up over the next financial year?
The way I would look at it, plywood has to be segregated, can't be looked as one market because there's an organized market and an unorganized market. Now, the reason that we are not successful in the unorganized play is because it is much cheaper quality, inferior plywood. People say that, MR plywood is being used and portrayed as PF plywood. So the customer is actually being conned. Now, that is a game that, of course, Century Ply cannot play. That part of the market is being cannibalized rapidly by MDF. But the segment at which we play in, the high quality PF segment, there the market is growing and we are growing within the market itself. So I think we are gaining higher market share and there's an increase in the market. So both of those bode well.
All right. Thank you, Keshav, for your take on how you see FY25 panning out. Executive Director at Century Plyboards talking about how you might see some pain point through some of the next year, but MDF laminates and all these segments continue to grow, and they foresee growth at a fast clip. Now we'll take a very short break, but on the other side, we're joined by Vivek Lohia. He's Managing Director at Jupiter Wagons, so stay tuned for that and more. Welcome back. A tough day for the markets this morning, but nothing too alarming. The Nifty is down about 100 odd points, 0.5% to go. If you're looking at what's hurting the most, is definitely the bank Nifty, which is down close to 1%. And if you look at all the sectoral indices, it would be led by banks, especially PSU banks, which are seeing a pain point this morning. In specific pockets, fertilizer stocks getting a beating, fact down 7.5% now, RCF, that entire pack doing badly. So are banks like Ujjivan, Small Finance Bank, and RBL in pain this morning. But one sector which is definitely bucking that trend to some extent are rail stocks. And we're talking now with Vivek Lohia. He's Managing Director at Jupiter Wagons, who's joining us on the show. Mr. Lohia, a very, very good morning to you. Great to have you on. Now, recently, you were on the news for, Vande Bharat order and these new kinds of batteries that you will be making for the Vande Bharat. Can you give us more details on that? Let's start with that.
Yeah, good morning. This is part of a broader plan. As you are aware that we are going to be launching an electric vehicle shortly in a couple of months' time. And as a backward integration, we are now focusing on the manufacturing our own lithium-ion batteries. So as we are a very integral player in the railway sector, and we saw a great opportunity there because railway is a sizable buyer of batteries. They have been buying mainly traditional batteries, which are lead acid batteries, which are not environmentally friendly and have the replacement cycles are very small and they are much heavier. So we wanted to bring in to a newer technology, and we have been now working with railways for the last 2 years, doing the necessary field trials and testings. So this is basically a culmination of that, where now recently we have been approved to supply the batteries for the Vande Bharat. And parallelly, our trials have been successful on the passenger coaches itself. So that also shortly we are expecting trial orders from Indian Railways.
Okay, so interesting stuff. Let's get into a bit of detail. And now tell me a bit about these LFP batteries for which you've gotten approval. This comes from the RDSO, that's the Research Designs and Standard Organization. Why is this different, this technology, lithium iron phosphate? And is it also more cost efficient? Can you give us a little more on this?
Definitely, it is in the long run, it is more cost efficient. One is that definitely so the traditional batteries are basically these are intelligent batteries. So this when the battery itself also can do a lot of diagnosis. So we know in case any of the electrical systems on the trains are not functioning, so the battery can give feedback on the same. Secondly, they are much easier to maintain. The maintenance cycles are so they don't have to be replaced regularly. Third, and the most important, over the long run, it is much more. It's about 30 to 40% more cost efficient than the traditional batteries.
In terms of clear orders for these LFP batteries, are those in place? Can you give us details there?
So we have orders from Siemens, and we are also working with other players. So as and when new orders for Vande Bharat coaches are going to be placed. So with say for example with BHEL. They have a sizable order for Vande Bharat. We are expecting an order book from them. We are working with similarly with other players. So it's a sizable market.
BHEL and Siemens both, sir. What is the size of the order right now?
So Siemens right now we have got a trial order for about I think for about 30 coaches roughly. I don't know exact number for them, and they expect in the short term itself, we expect orders for at least between Siemens and other players for at least 50 to 100 additional Vande Bharat coaches. Plus, I think for us, another big opportunity is the traditional passenger coaches. As you know, the population of that is more than about 50,000-60,000 coaches. So there we expect a huge opportunity. As I mentioned, our trials are over. We expect a developmental order shortly. I think once we are able to execute that, that market is going to open up. Parallelly, we are also working on locomotives with Indian Railways. So there itself, right now as auxiliary power, they're using generator sets, which are again not environmentally sustainable. So we want to replace them with again lithium-ion battery packs. So there itself. So overall, I think it'll see this is a new technology which is being introduced. So it'll take a little bit more time, but we have done the hard work. I think in the next 1 or 2 years, we will see a huge opportunity in this sector.
Is there a number, Mr. Lohia, for FY25 and what the order book could be valued at for these new batteries in FY25? Is there a number there?
Again, very difficult to give numbers, but we don't. But it's going to be, as I mentioned, in the next 2 to 3 years, we expect this market for lithium-ion batteries in the railway sector, in particular, to be around 1,000 crores to be the overall market size. So, and in that market, we are definitely going to play a very, very strong role in that.
Market share you targeting, Vivek, there? Good morning, Niraj here.
Good morning, Niraj. We are targeting a sizable market share. We have the advantage is that we have the first lead in the segment. And as you're aware that we are also, working with railways and the other sectors and in the coaching and in the other products. So, there's a opportunity for us in terms of integration. So definitely we want to be the market leaders in that segment. That is our target.
But any choice, I mean, relative to your overall revenues, not that large, but did I hear you say that you want to launch EVs as well?
Yeah, so our commercial EV, we are launching a 1-ton 4-wheel truck, which has already got the ARI certification. It is being launched with more than 80% localization. So we are also eligible for FAME subsidy on that. And we expect between August to September for the rollout of the trucks to happen.
And what kind of revenue targets, assuming that everything goes as per plan, what do you anticipate FY26 revenue targets to be like from that, maybe?
So we are expecting to at least sell anything between 1,000 to 2,000 vehicles annually in that segment. After the 1-ton truck, we are going to be, within the next year, we are going to be launching the 2-ton as well as the 3-ton payload. Okay. So our focus is on the last mile connectivity.
Got it.
And I think with this, and there's again, as you're aware that this is the segment which has got real potential in it.
Most certainly. So what does it, I mean, let's say combined volumes of 1,000 to 2,000 trucks, what does it make a revenue size like for just from the EV side? Let's say annually.
So it'll be beyond, annually it'll be beyond 200 to 300 crores of revenue.
Okay, so EV plans add about 500 plus 300, let's say 800 crores of revenue, let's say in FY27 if all goes as per plan. And what are the organic revenue growth size? Because you've grown quite admirably, but now the base is higher, right? From 1,000 crores in 21 to 3,700 crores, you've grown very well. What do you do from here?
So again, there are a lot of opportunities. We have invested heavily we have recently acquired a railway wheel plant of Bonatrans. It's one of the biggest manufacturers of wheel sets in Europe. We have acquired that plant very recently, and we are doing sizable capex there. In the next 2 years, we expect to do more than 1,500 crores of capex, where the plant will be fully integrated. And the revenues, I think, from FY27, it'll be close to about 3,000 to 4,000 crores of incremental revenues we are expecting from that. We plan to manufacture about 100,000 wheel sets from that plant. This year itself, we are targeting a revenue of close to about 300 to 400 crores from that business. And, as you're aware that Tata Wagonka being, again, promoters in Jupiter, and they are, again, the biggest manufacturers of freight cars in Europe. So their requirements are close to about, they require close to about 50,000 wheel sets themselves. So again, there's a huge export opportunity where, the first time from a net importer, India is going to start exporting wheel sets, and that too also in the European market. So definitely that is one opportunity which we are very, very focused on.
What is going to be the size of that export book for you? as a proportion of revenue going forward, Vivek?
So we expect at least 40% of the overall revenues from that business. As I've told you, it will be anything between 3,000 to 4,000 crores of revenues. It will take us about 2 years to get that full backward integration piece in place. So we expect at least 40% of the revenues to be exports.
Okay, exciting times ahead for Jupiter Wagons. Thank you so much for joining us this morning. Vivek Lohia there talking about the company's plans, and the big one is an commercial EV vehicle out by September or so. With that, it's a wrap on India Markets Open, but stay tuned. Talking Point up next.